Let's quickly move on and talk about the next company which is on our radar, and we're looking at Max Estates now. The stock listed on the 30th of October this year. Since then, it has moved higher by about 16%. The company launched its first residential project in Noida. Its pre-launch sales clocked about 1,800 crore rupees. Rishi Raj, Chief Operating Officer at Max Estates, is with us to talk about the plans going ahead, business outlook. Rishi, thanks for joining in. Season's greetings to you. Hope it's not too cold out there in Delhi NCR. But, let's start with the basics.
Nice to be here.
Lovely. Well, let's start with the basics. Tell us more about this first project, the Noida project. I mean, how the take-up has been like. And give us a bit of a near-term outlook. Let's say, if we look at 24, 25, 26, do you plan to primarily remain an NCR, a North India sort of a company? Give us the way you think your mix will shape up over the next 2 to 3 years.
Thank you, Sonia. Thank you. As far as our first project, residential project in Delhi NCR is concerned, in Noida, this is on 10 acres, 1.1 million square foot, one of the least dense project in Delhi NCR, 201 units, and market has responded extremely well. They have responded extremely well to a promise of live well. The design is really focused on ensuring holistic well-being and top-notch consumer experience. So this particular project is not only sold, our first collection is in, and the construction is already begun and is well on track. So that's about our Noida project. In terms of our outlook and what is in pipeline, as you may know, we have successfully built a portfolio of 8 million square foot, of which 4 to 4.5 is commercial real estate, 3.5 is residential. Of commercial, 1.5 to 2 million is already delivered, and we have established a very successful track record in commercial office space anchored on work well philosophy. First two project 100% leased, the third project which got completed in Feb already 50% leased at 25 to 30% premium. On residential, we are looking forward to launch our second project in Gurgaon mid of next year. This is going to be 2.4 million, right at the start of Dwarka Expressway in sector 36A, and this is going to be first intergenerational project at scale that Delhi NCR would have seen. So that's what we have in portfolio at this point in time. In terms of beyond 8 million, we are looking forward to acquire almost 1.5 to 2 million square foot of residential opportunities every year to deliver on our guidance of 15% on an average growth in booking value year on year, which, as you rightly said, this year was 1,800 crore on the residential side. We are looking forward to 22 to 2,400 crores next year and take that trajectory of booking value to 4,000, 4,500 crores. And that is the trajectory we would like to maintain.
Okay. Rishi, hi, good morning. Rishi, hi, good morning. Prashant here. Sorry, allow me to come in. So basically, pre-sales of 1,800 crores so far, right, on the residential side.
Yes.
And you're saying that for FY25, that number should be what? Should be 4,000 crores?
No, for FY25, the booking value
FY25, yes. Yeah.
Targeting is 22 to 2,400 crores, and then maintain a growth trajectory of 15% on an average. And seeing in a 5-year time, look at the booking value of 4,000 to 4,500 crores in terms of residential booking value.
Okay.
Yeah, and what about the commercial assets there?
Just one more thing, Rishi. You said you plan to add how much? 1.5 million to 2 million square feet annually. Is that the number?
Yes.
Residential?
So for us to deliver on this trajectory for residential booking value, we aspire to add 1.5 to 2 million square foot of gross development value through joint development or outright acquisitions in Delhi NCR every year.
Will you have to take on a lot? I mean, how will you fund this annually? Could you run us through your sort of on the debt side? What will numbers look like as you do this?
See, I think broad guidance in terms of funding, it will come through multiple sources. As I said, 8 million square foot is already in. Of that, 4.5 million is commercial. Commercial has got top line annuity potential of 450 crore at peak occupancy. So the sources of funding will be multiple. On the commercial side, we have got New York Life as a joint venture partner. And we will be using the LRD against those rental income as one of the sources. The internal accruals from existing residential project would be another source that would be used for funding. And we would also be looking for a joint, and we will be using joint development routes, preferably in the residential growth, to keep it from a capital perspective relatively asset light.
Okay, Rishi, before I go back to the numbers on the Noida project, just to get the debt picture out of the way. So what is the debt equity? I mean, the debt that you are comfortable taking on as you fund a lot of this expansion?
So if you look at our current debt to equity, it's net debt to equity today as of first half 2020 FY24 is 0.4. In terms of our guidance for debt to equity, we would like to maintain it below 1, on an average 0.7 to 0.8 debt to equity ratio. And as a matter of principle, we would not like to acquire land through debt. That will mostly be equity funded, and construction finance as and when needed will be through debt.
Okay, got that. Now I'm going back to the bigger number of 4,500 crores. That's the residential booking value number that you've given. That should play out from the Noida project by what, say, FY26?
No, so see, Noida, okay, let's distinguish between accounting top line and booking value. If you're talking about revenue, which in real estate get accounted for on possession, then the Noida project, which we have already booked 1,800, which will be collected over 4 years. Once in next 4 year Noida project is delivered to customer, it will be accounted as revenue in the top line in 4 years from now. What I'm talking about is every year, when I say booking value, what I mean is what is the value that we are expected to book through residential launches every year.
Yeah, got that.
Okay, beyond.
Let me just ask you about commercial on the two things, the Max Square, Phase 1 and Max House. What is the progress in terms of sale, lease, etc.? Where are you at?
Okay, so just to recap for your audience, Prashant, Max Towers and Max House Phase 1 was our first 2 commercial office project in Delhi NCR. Both of them is 100% leased, 30% premium. Max House Phase 2, which is 1.5 lakh square foot, that we have got occupancy certificate in December, and I'm really happy to share that we already pre-leased before occupancy 54% of the total, and we expect it to lease completely over next 6 to 12 months. And that is again going to be at significant premium to micro market. As far as Max Square is concerned, which we got completion in February of 2023, which we delivered in a record time of 3 years from February 20 to February 2023. That since completion, we have already leased 50%, and we have a very solid pipeline and looking forward to completely lease that over next 12 months or so. And again, we are able to command premium in the similar range even for Max Square Phase 1.
Got it. Rishi, we'll leave it there. It's a pleasure having you with us here on CNBC-TV18. Thank you very much for your time. Season's greetings from all of us here, and all the best of luck as we head into 2024. Thank you very much. That's Max Estates.